10 a.m. in Lagos, Nigeria. Good morning and welcome to Business Morning here on Channels Television. I'm Ini John Mekwa. Well, let's begin with some current stories in the business scene. The African Development Bank has praised the United States government's efforts to channel investments into Africa and singled out Prosper Africa initiative as illustrative of a deepening commitment to the continent. A statement from AFDB says that since 2019, United States government has facilitated 107 energy, 75 agribusiness, 54 healthcare, and 43 information and communication technology deals across Africa, with a total export and investment value of $50 billion. In November that year, the Africa Investment Forum signed a memorandum of understanding with the United States Trade and Development Agency to support high-quality infrastructure solutions for sub-Saharan Africa. And the United Kingdom says it is providing up to £10 million to support Nigeria's commitment towards achieving cleaner energy and reduce carbon emissions. A statement from the British High Commission in Abuja says that the financing will help Nigerian investors focus on low-carbon energy, support off-grid projects, as well as the country's Conference of the Parties, which is COP26 commitment to reach net zero by 2060. It adds that financing will help scale up domestic financing for eligible off-grid clean energy infrastructure such as solar mini-grid and home systems, clean cooking infrastructure, and SME cold storage infrastructure in the country. Meanwhile, the UK Minister for Africa, Vicky Ford, affirmed that the country is committed to increasing both renewable energy and energy access in Nigeria, driving clean, sustainable, and resilient growth.
This is the first time Mrs. Vicky Ford will be visiting Nigeria as UK's Minister for Africa, Latin America and the Caribbean. The aim is to strengthen our country's relations with Nigeria. She is accompanied by the UK's High Commissioner to Nigeria, Mrs. Katrina Lang, and other diplomats were received by Nigeria's Minister of Foreign Affairs, Mr. Jeffrey Onyema.
We're extremely happy with the progress of our cooperation and look to strengthen that even more.
Mrs. Ford announces her country's support to Nigeria in tackling insecurity, corruption, climate change, low female school enrollment and trade.
It's a partnership that, yes, is built on defence and security, but also trade and the economy and climate change and more. On the defence and security, it was very, very good to have those detailed meetings between our national security advisors in London 2 weeks ago, and to really think how we can help in this partnership to help strengthen some of the challenges that you face in terms of security here.
Her entourage then moves to the residence of the UK High Commissioner in company of the Minister of Power and other officials of the federal government.
Yes, definitely.
Here she announces a 5.6 billion naira intervention to boost renewable energy production in Nigeria.
You'll all know that Nigeria still has 85 million people without reliable access to energy. So I am very pleased to announce £10 million of UK aid funding today.
A memorandum of commitment for the repatriation of over £210,000 to Nigeria is signed. The UK minister emphasizes the dangers of corruption and why it must be checked.
If we are to succeed in our efforts to end poverty, boost prosperity and defeat terrorism, we must tackle these burning issues of bribery and corruption.
This visit by the UK minister to Nigeria comes weeks after the UK-Nigeria Security and Defence Partnership Dialogue in London earlier in February, during which both countries agreed to strengthen their relations in the areas of military cooperation, counter-terrorism, civilian policing, among others. Emperor Simon, Channels Television News.
And now let's come back home in Nigeria and look at the 2022 insurance industry report by Augusto and Co., which shows that the Nigerian insurance industry is more resilient than expected despite headwinds, with an estimated gross premium income of $520.1 billion for the year ended December 2020. And for the same year, the industry paid out net claims of $196 billion, and that was 20% up year on year, representing 37.6% of GPI, and worsened, of course, by the violence that triggered the End SARS protests in October 2020. Now, let's look at this report and find out where the resilience lies and other potentials in the insurance industry in Nigeria. We have Mr. Ayokunle Olubumi, Head Financial Institutions Ratings with Augusto and Co. Hello, Ayokunle, good morning. So when you say that the insurance industry is resilient, more resilient than expected, what have you tested this against?
Thank you very much, Amy. Good morning, everybody. If you look at the insurance industry, let's not forget that the insurance industry is very cyclical, meaning that if the economy is performing well, the insurance industry is expected to actually even show improved performance. And when we have a problem in the economy, the expectation is that the insurance industry is going to be negatively affected. And if you cast our mind back, in the last couple of years, we've contended with various economic headwinds, from high inflation to low interest rates to the FX crisis, high unemployment, and all of this aggravated by the pandemic and also the violence that triggered the EndSARS protest. But having said that, all through these years, year in, year out, we've not recorded a reduction in the industry's gross premium income. Rather, the worst case scenario was what we had in 2020, while the GPI actually remained flat. And if you look at it, during these periods, a lot of insurance companies had to readjust their product, had to readjust their pricing, some had to significantly even drop their premium, some had to even stagger payment of premium for customers. But over this, despite all of these challenges, and despite the industry being cyclical, we've seen that we've not recorded a decline in the industry gross premium income.
But wouldn't you say that's because it's not a very popular industry in Nigeria? I mean, a whole lot of Nigerians are very reluctant about embracing insurance. Even the one that people are compelled to, for instance, which is the car insurance, people do the third party. And we see that only about 3.4 million of over 13 million vehicles in Nigeria actually do have even the third party insurance. So maybe they're not moving because people are not really going in there.
Yes, yeah, I agree with you. I think in Nigeria, most Nigerians don't have practical knowledge of insurance. We don't really have a practical awareness of insurance. I was discussing with somebody 2 weeks ago, and you'll be shocked that somebody that is educated, that is staying in Lagos, which is regarded as an urban center, the guy was even shocked that he could insure a used car, right? And for him to have comprehensive insurance on it. According to him, his own belief was that a comprehensive insurance is just for what? Is just for brand new cars. So a lot of Nigerians don't really have the practical knowledge of insurance. Talking about the third party insurance, I'm sure you've actually seen saying of 2 or 3 people fighting on the road because somebody scratched my car. And if you speak to them, a lot of them, both of them, are third party insurance. So most of them just get this, but they don't even understand what it entails. What are the things that they can benefit from insurance? A lot of people don't even know that even as a tenant, if you don't even own a house, you can even insure your goods, right? You can insure your phone, and then if anything happens, you have screen crack or anything, you can actually even get claims on it. So a lot of Nigerians don't actually have practical knowledge of it. Another reason why a lot of Nigerians are not even embracing insurance is also the wrong or misconception that insurance is expensive. Most people don't realize that, look, insurance, you are paying a small premium to insure what? The value of the assets. And think about it, the larger the value of your asset, the higher will be your premium. If you consider the percentage of your premium relative to the value of the sum insured, because sum insured, the value of the asset you are insuring, is actually very, very small. Sometimes it could be as low as 2%, right? And also, most people don't realize that there's something unique about insurance. You buy insurance products when you don't need it, right? And when you actually need it, it will be very late for you to procure it. So think about it. By the time you are insuring your car, you are insuring your house, probably you've not had any damage. right? The car, you're still using the car, you're still living in the house. But let's, God forbid, assuming the car got stolen, it's actually too late for you to insure the product. So most people actually don't have practical knowledge about it. And I think to actually bring more Nigeria into the pool, insurance company need to do a lot of education. And in addition to that, I think insurance company also need to look for ways of compensating customers that year in, year out, they've been insuring their assets and they've not recorded claims. Because the honest truth is that if you've been insuring your house or your car over a 5, 10, or 15-year period and you've not recorded any claim, you might get discouraged in even insuring it again. But what you see, the best thing will have been to, since you've not recorded claim over some period, they can reduce the premium for you, or you can even have a cash payout back to you. Right. Although most insurance companies have this in their policy, but they hardly actually won't. They actually
so I mean, it's good you mentioned that, because that's the next thing I was going to ask you. When you talk about people who you see on the road fighting and they both have third-party insurance, it's sometimes because of, okay, what they've learned from people's experiences or what they've heard, or some of them have even experienced it from this insurance. There's so many hidden clauses. So they say, oh, you insured for this. So when the problem comes and then you're being told you have this clause, it has to be according to this, they have to do investigation. So I think the insurance companies themselves, they have to be more transparent, make the reimbursement process less cumbersome and more transparent for people to trust the system.
Yeah, I agree with you that a lot needs to be done. But also, to be fair to the insurance company, you notice that over the last 6, 7 years, a lot of work has actually been done to sanitize the process, to even make the policy to be as explicit as possible. I agree with you. And you will even see that for some insurance companies, some of them even, they will tell you that, look, if you have claim, they are going to pay within 24 hours. Some actually try to do claims within 72 hours, right? And even some try to even make the claim process, the process of you actually even getting your funds, to actually make it even as less cumbersome as possible. But having said that, I agree, not only the insurance company, the industry needs to do a lot of work. Explain more to people, because the honest truth is that, look, once the claim passes a particular threshold, right, it's actually imperative for you to have what we call loss adjusters, for you to do a lot of investigation. But what you notice is that for most insurance companies, one is below a particular threshold. Some will say 300, some will say 10 million, some will say 5 million, some will say 300,000. One is below that threshold, they quickly process it. Because you agree with me that if you have a claim up to like 10 billion, you agree with me that it is imperative for you to actually, for the claim to actually be properly investigated. But I agree with you, a lot of work needs to be done. And even in the interaction with the regulator, NIPON, right, there's also the plan to also try and even simplify the process more.
And, you know, in the Western world, insurance actually serves a whole lot of purpose, more than just the third-party car insurance. You know, so is there a way to, I know you talked about the regulator and, of course, the company, but are there no ways to bring this into the minds of Nigeria, into the business space?
Yes, I think a lot of education needs to be done. And also, to be fair to the insurance companies, over time, they've tried to even sensitize, because something that we didn't talk about is also that people do believe that insurance don't pay, that once you actually even insure your cars, you will actually get claims. But the honest truth is that actually they do pay. And if we've been looking at it since the violence that trade the NSAS process, as at now, over 11 billion has actually been paid out as claims. Right? So a lot of education needs to be done. Now, I think also in the type of adverts that insurance companies are actually putting out, it's not only to say, okay, come and buy insurance. It should be something to actually even educate the people. And also insurance agents, they need to actually do more to even explain to people, right? This is the policy, these are your rights, these are your obligations, right? Regarding this policy, if there's an issue, this is the number you should call, and these are the terms, these are the conditions under which, if X, Y, and Z happens, we will not actually even pay the claims. Well, I agree with you. A lot of education needs to actually be done, because most of us just have theoretical knowledge of insurance. Right? Most people just take it like something that you just have to do. And even talking about comprehensive insurance, a lot of us don't even know that there are about seven compulsory insurance. But the one that everybody actually even try and even get is actually what? The third party insurance.
Third party. And then the pandemic also brought a lot of redefinition to what should be included in insurance policies or not. Because, I mean, then a lot of businesses were facing, of course, you know, the consequences of the pandemic, the shutdown. People couldn't go to work, production couldn't take place. And some people had policies which they couldn't access because, of course, the clauses and the condition, you know, were not captured in that policy. Have they been able to change some of the clauses, you know, some of this policy to accommodate a pandemic or something that looks like a pandemic?
You know, in insurance, is what you buy that you actually even get, right? So if you buy what we call a plain vanilla policy, a claim policy where you don't have riders, you don't have adults to it, your premium will seem a bit low. But if you have some exigence, something that is not covered by that policy, unfortunately, it won't be. Also remember that pre the pandemic seems like something that is almost impossible, to have. The thing is that if you want the pandemic insurance, even before the COVID pandemic, insurance company will actually even drop the policy for you. But most people don't take it up because something like a pandemic seems something that is actually a bit far-fetched, right? But what we had with the insurance, with the pandemic, realized that most people are now taking it serious. And we've seen one or two businesses that actually took it on. They enjoyed it. Look at what happened to Wimbledon, right? Over 17 years, right? Because they started taking up pandemic insurance, right? Since after they had the SARS outbreak. Over 17 years, they paid over 25 billion pounds as what? As insurance premium. But when the pandemic struck and they couldn't hold the Wimbledon in 2020, what happened? They got claims payment of almost 115 million pounds, right? So I think most businesses are now trying to even inculcate that into their business planning. Because if you don't actually even take a rider that has to do with pandemic, unfortunately will not be covered. And also something similar to that is not only the pandemic, the rise in social unrest that we are seeing in Nigeria has also made businesses to actually even be looking at their risk planning again. Because for example, if you don't have the clause that we call SRCC, strike, riots, and civil commotion, things like riots, strike, you will not actually be covered. But now with the violence that trained the NSAS, this xenophobic violence that we had, and even so on to the security challenges that we are even having now, most businesses are now thinking that, look, it's actually the right time for them to actually even be taking on this SRCC clause. The problem is that it's there if you want to take it, but most businesses didn't think that, look, it is something that they need to actually even take on. And even from the insurance company perspective, even the pandemic also helped in even properly analyzing risk. For example, when you take a car insurance, there's something that is called the road risk and then the ground risk. Ground risk is the risk that when you park your car, something is going to happen to it. And then the road risk is when you are driving. And what happened during the pandemic, that most of us park our cars at home. So the road risk was not actually involved. So people now start thinking that, okay, should I be thinking that, what should I actually take? Why only want the ground risk, and also do I want to cover the road risk? Similarly, some similar things happen in the aviation space. Because recall also that during that particular period, the planes were grounded, right? So the risk of flying, right? The risk was not even covered. So not only from the business perspective, even from the insurance perspective, right? From the insurance company's perspective, analysis of risk has actually even changed. So also the same thing as well, the pricing of such risk.
Very interesting. So at this time in Nigeria, let's look at the SMEs. How important is insurance to them? When we look at the situation in Nigeria, of course, we have the security situation. Then we have a pre-election, because according to Alliance Barometer, political violence is the second highest threats to businesses this year in Nigeria because of the election next year. So when you look at this scenario, how important is insurance to MSMEs, and what direction should they be looking at?
Thank you very much for a very lovely question. Now, I think insurance is even more important to the MSMEs than even the large corporates. Because you realize that, remember in Nigeria, we don't really have social security blanket that can even pushing you. Remember that if anything happens to those MSMEs, for them to actually come back is more difficult compared to a large corporate with actually huge shareholders backing that can actually even rebound, right? So it's very important for the MSMEs. And I think another thing, and the problem with some MSMEs is that they can't afford the insurance premium. And I think that is why micro insurance that NICOM is trying to even make to come on stream is going to help a lot. Because the beauty of micro insurance is that you can insure relatively low valued assets, right? The one that the big insurance company will not be interested. You can actually insure it with them. And the beauty also is that micro insurance allow you to actually even pay your premium, right, in line with your cash flows. So so you can have a situation in which you'll be paying your premium, that can be spread for you, that you'll be paying it daily or weekly or monthly. It will bring it down up to their level. So I think insurance is more important for the MSMEs, and I think micro insurance, which is the one that is more suited to their businesses, right, will actually help MSMEs.
Very interesting. Thank you so much. Not a very popular sector, but important, as we have seen, and we do hope that more businesses, especially the MSMEs, as you have said, would embrace that. Mr. Ayokunle Olubumi is Head Financial Institutions Ratings with Augusto and Co. Thank you so much for joining us on the show this morning.
Thank you very much for having me.
We'll take a break now. When we come back, we'll head to the commodities market space. This is Business Morning on Channels Television. You're welcome back. You're still watching Business Morning on Channels Television. Well, oil prices jumped more than $2 today on supply disruption worries as tensions between Russia and Ukraine escalated after Moscow ordered troops into two breakaway regions in eastern Ukraine. Moscow's move drew international condemnation, and U.S. officials have said Washington, in coordination with allies, is planning to announce new sanctions on Russia. U.S. President Joe Biden has issued an executive order to halt U.S. business activity in the breakaway regions and ban import of all goods from those areas. U.S. West Texas Intermediate crude futures jumped by almost $3 to $93.86 a barrel. And that's against Friday's settlement, while Brent crude futures rose $1.36 to $96.75 a barrel, adding 2% gain yesterday. Well, how does this concern Nigeria? We have Adesola Simoni joining us now for this conversation. Hello, Adesola. Good morning.
Hi, Ine, good morning.
So we see that oil prices are getting closer and closer to the $100 per barrel, which is also becoming attractive for U.S. shale producers. Talk to us about this development and your outlook for the oil prices, especially as it connects to Nigeria.
Okay, thank you for that question, Ine. So first, like you mentioned, oil prices have increased around 20% year to date, and yesterday it's reached a 7-year high of $96 per barrel, driven by, like you mentioned, the escalation of tensions between Russia and Ukraine, and also tighter supplies. Tighter supplies globally. We've seen OPEC continuously fail to meet its production targets, and for January they missed their target by around 900,000 barrels per day. We're also seeing stronger demand. We're seeing a revival in oil demand to pre-pandemic levels, which is also supportive of oil demand. And all of this is making oil attractive for even high-cost shale producers. We are now seeing marginal fields in Oklahoma in the U.S. as well as Colorado in the U.S. come back on stream. These are fields or marginal fields that were offline since 2020 in the middle of the pandemic that begin to come online, even though they are high-cost producers. The fact that oil prices are reaching near $100 per barrel is attractive for them. So going forward, I think that the outlook for oil will depend on escalation of tensions between the U.S. and Russia over Ukraine, and some analysts are already seeing oil reach $120, $125 per barrel in the coming weeks. For Nigeria, I think while the oil prices are positive, they are good for Nigeria, the effects for Nigeria is mixed. I think if Nigeria is able to increase her oil production, then it is positive in terms of exports revenue. However, because of Nigeria also imports PMS, the higher oil prices are in the global commodities market, the higher the landing cost of PMS in the domestic economy, and that also has implications for subsidy. Already we're having some issues with PMS supply in Nigeria, and we're seeing long queues for that.
Yeah, so when you talk about the high-cost producers, now, it's becoming more attractive to them. Do you think that their supply will now, drive the price downwards? Do you see that happening?
I think, yeah, they are good question again, Amy. Yes, we are seeing, like I said, more marginal producers. These marginal producers, high cost producers are kind of marginal players. So the impact on global oil output is marginal. However, we are also seeing more output coming from other more profitable U.S. producers, U.S. shale producers, particularly in West Texas and the Gulf of Mexico. And these guys are going to increase their gearing to boost their production, which will moderate oil prices going forward, at least towards the end of the year.
Okay, so let's look at other commodities now. The price of cocoa in the commodities market is down now more than 0.5%. It's now about 2,600. As extreme weather tightens Cote d'Ivoire's output, and Nigeria expects adequate rainfall for the 2022. What is the implication of this development, and where do you see cocoa prices going?
Okay, so the context for context, what is happening is the dry Harmattan weather is threatening cocoa mid crop in large West African countries, large West African producers such as Ivory Coast, Ghana, Nigeria, Cameroon, etc. But as the Harmattan season ends and the rain season is coming, we expect that to be positive for cocoa production, because the dry weather it reduces the soil moisture for these cocoa plantations, and then it affects the size and also the quantity of cocoa that is harvested. But with the coming of the rains, I think it is positive. It will help support the mid-crop harvest for these large producers, and with higher supply from these large producers in West Africa, it will dampen the prices in the global commodities market. But on the other hand, we are seeing smaller cocoa inventories in the US, which suggests that there's strong demand for cocoa in the US. We're also seeing for chocolate in the US, I beg your pardon. We're also seeing strong demand in Europe, even as many countries lift up the final coronavirus restrictions. That is also affecting demand. So we are seeing strong demand. So I think the outlook is going to be dependent on the interplay of these strong demand forces coming from North America as well as Europe, as well as the higher supply coming from West Africa, as we expect better weather conditions to support the output.
Yeah, and another commodity that seems to be in the news is sugar. We see that the price is falling in the global markets. What's going on there?
So what's going on is that for sugar, we are seeing huge production from one of the largest producers globally. India is the second largest producer of sugar globally after Brazil. And we are seeing very huge production. I mean, their production for this 2021-2022 marketing year is projected to increase 3% to 31.9 million tons. So that is essentially what is driving the price of sugar down. But also we see in Kenya that the deliveries, the production in Kenya is Kenya's production to Kenya's supply to their sugar milling factories is smaller month on month, comparing November to December, and that has, I think, the impact for the global sugar price is trivial, because Kenya, although is the second largest producer of sugar in East Africa after Uganda, in terms of the global scale. On the global scale, they are a marginal player. They are a net importer of sugar, and their production for this marketing year, is estimated around 650,000 metric tons. Meanwhile, their domestic demand is around 1 million metric tons. So I don't think that developments in sugar production in Kenya would have any effect on global sugar prices.
And Nigeria wants to export beans, but when we talk about exports, there's not a whole lot of process. I remember when we tried to export yam, we had some issues there. So are we ready for this? Does it look like we're ready to export beans?
Let me give you some perspective. So globally, Nigeria is actually one of the biggest producers of beans in the world. They account for around 58% of beans production globally, and in Africa around 61%. That's according to data from IITA. And the FAO also estimates Nigeria's production at around 3.6 million metric tons. So that is good. But the problem with exporting beans or even exporting any commodity from Nigeria is the issue of quality control.
Exactly.
So in 2015, the EU banned Nigeria's export of beans because they said it contained excessive amounts of chemicals of pesticides or chemicals that are used to preserve the beans. And in 2018 or 2019, I think Nigeria tried to appeal that ban, but it was unsuccessful, and the ban was extended up until 2022. So now the Nigerian Export Promotion Council is trying to, appeal the ban again, trying to, sensitize, the stakeholders in the whole beans export value chain to adopt agricultural best practices to, use better means to preserve their beans, or, moderate amounts of pesticides. So if the appeal is successful, then I think it's positive, at least for the players in the beans export value chain. I think it's positive. I think it will increase their incomes. It may increase boost some export revenue. But I think for Nigeria as a whole, the effect will be small, because even though beans is a small part of Nigeria's export, agricultural exports is dominated by cocoa. But even agricultural export as a fraction of total exports is very small.
Yeah, but I mean, even if it's small, I'm sure it will enrich the life of some farmers. So is it for us to appeal?
For the farmers, it is positive. I mean, for the individual farmers, yes, it is good.
Yeah.
But for the country as a whole, it is trivial.
Yeah, but I mean, should we be appealing to the EU, or we should be setting things right? I've had a couple of conversations when it comes to exporting some of our crops. And from the farm, like you mentioned, the issue of chemicals, the pesticide and all that, isn't that what we should be doing, sort of just appealing to the EU to allow us, If we have a good product, I believe people will buy it. We don't need to appeal to them.
So what they are trying to do is they are trying to improve those practices. They are trying to adopt, agricultural best practices globally, so that, because even when they appeal, they have to show that the beans meet the required standard. So to meet the required standard, they need to change some of the practices, like the use of pesticides, the storage facilities, etc. So that is what they are trying to. That's what the Nigerian Exports Promotion Council is trying to do to re-engineer that whole agricultural or beans exports value chain, so that the beans exports will be acceptable or will meet the minimum threshold to be exported to the EU.
All right, so I do hope we do meet that threshold. What else is happening in the commodity space?
So in terms of commodities, if you look at the domestic commodities, most of them are flat. If you look at the price of beans, a 50 kg bag of beans is still flat at 42,000 naira. Cement is flat at 4,000 naira. Tomatoes, a basket of tomatoes is flat at 13,000. Pepper is flat at 13,000. Onion is flat 45,000. Most of them are flat at the moment. However, going forward, if the fuel queues or the fuel scarcity persists, then it may pass through to domestic commodity prices. And this coincides also with the commencement of the planting season. And the planting season is usually associated with scarcity of commodities. So if the fuel scarcity persists and as it coincides with the planting season, I think that domestic commodities prices may inch upward in the near term.
All right, Adesola Sumoni joining us from the UK now. Thank you so much for giving us updates from the commodities space. Enjoy the rest of your day.
Thank you for having me.
And then we learned that in the UK, restrictions are being lifted. So very soon you'll be moving around really free in the UK.
Yes.
All right, enjoy your day, Adesola. So let's take a short break now before we go to the market space. Still stay with us. Yeah, welcome back. Well, it's still Business Morning here on Channels Television. It's time for the market now, and the market ended green yesterday. That's the equities. Let's be specific now. I mean, Will, I know that you are happy about that. I wonder how much got into your account. What a lot did you get?
Oh, Ini, I'm not going to disclose that.
Just the joy of reporting a green market. That's all.
Because kicking the week off on a positive note is joy to investors. You know, people want to see the market going up and them having good returns on their investments. The market closed yesterday positive, up 0.2% at 47,233.9491 points, and the equity cap is still at the 25 trillion naira mark there, and that's a good thing. It's not gone below that, and I think we're setting a record there, probably going higher to 26 trillion naira in the next couple of days or probably weeks. But we're just hoping that because of the earnings season that we're coming on and the inflow of cash and investments coming in as much as we want, and companies, you know, posting better than expected results, that we're going to be probably seeing good things in the market coming soon. And looking at the activity chart, we see that the volume were like inched up higher yesterday by about 8% to 421.46 million units, valued at 4.22 billion naira, and all executed in 5,961 deals. Now, it was not it was lower than what we had last week, Friday, in terms of volume and value, but all in all, it was a good one because the market, you know, investors were interested in more of like in Guinness and international breweries. The consumer goods boosted the market yesterday, and we saw other sectors moving, the banking sector also moving the market up in that regard. Now we move over to the banking, the sectoral performance. We saw that banking was up 0.66%, as I mentioned earlier. Consumer goods was up 0.37%. Industrial was up. Insurance, only the oil and gas closed flat yesterday. We're going to find out why, but maybe Anis will give us the insights into that. But we see that great things were happening in other sectors. Key indexes were all in the green. Now we have Adonri to tell us what's really going on in the market. Good morning, Adonri. Okay, there, I think we're having a technical glitch there. Now, we saw that United Capital, as the UCAP, was up yesterday 10%, followed and also with Alti Briscoe. We've seen those two stocks moving really up. There's an uptrend with Alti Briscoe, and we don't know what's really, influencing the sentiments with that stock. But we're going to have more insights when we have our analysts back to discuss it. And also United Capital, they posted better than expected results, and investors, the share price was up almost 13.2. 13 naira 20 kobo yesterday, up 10%. That's a great thing for investors. And then people with a dividend of 1 naira 50 kobo, what more can investors ask for? Now we move on to the unlisted equities market, where we saw also bullish trends in that market. It started rebound from last week's close of very low, dismal, more than 2% down over the weekend, but we're seeing that they're up 0.52%, picking up really good, strongly there at 738.41 points, and then the market cap is at 625.27 billion naira. Now we'll move quickly over to where we see the volume and value of deals transacted yesterday. Value was 24.11 million naira yesterday. That's a good one for the market, especially knowing that there's not much liquidity in this market segment, and we're hoping that there's more liquidity coming and there's a boost for investors. Now we're going to go quickly back to Donry to tell us what's really going on with the market. Good morning, Mr. Donry.
Yeah, thank you very much. Good morning. Happy to be with you today.
Good. I'm so happy to know that the market is back in the green after yesterday's choppy movement and last week's choppy movement in the market trend. Why are we seeing this, especially with United Cap? I mentioned earlier that United Cap posted 10% gain, but could you tell us more about that stock? What's really happening with it?
Yeah, that stock, United Capital PLC, has set the capital market alight with the very mouth-watering dividend that was declared for the full year 2021. It has beaten investors' expectations. And so it's not surprising, therefore, that the market is reacting enthusiastically to that security by bidding more for it. Yesterday, the price appreciated and it was trading at over 13 naira per share. It's completely unprecedented. And it's gotten us to a situation which somebody described as a child or a son that has become greater than the father. That, UCAP was actually an offshoot of UBA. But now that company is performing better and even surpassing investors' expectations much more than UBA itself. So it contributed, I think, to the recovery we saw in the market yesterday. Although there were also movements in other sectors, the banking sector moved powerfully yesterday, together with consumer goods sector. So all those combined to push the market out of the doldrums that we saw last week. But however, what we saw yesterday was high volume of trade and low value of trade, indicating therefore that the momentum is gradually declining for the high cap stocks. And so most of the stocks that are driving the market now are the small mid-cap stocks. So that is the situation in the market. And if that continues, therefore, it means we're likely going to have a market that will just be flat, with propensity to move a little bit above the horizontal line or a little bit below, because we don't really have a big, major price-sensitive event that is capable of swinging the equities market into any direction. Also, the fundamental market and the economy remains strong, as out of which there is nothing. What would have affected the market negatively, which is this fuel crisis, appears to be abating now. And so we're going to see a market that will just be stable throughout to the end of this week.
Oh, thank you so much for that. We're hoping that the fuel crisis, I mean, the crude oil prices that we're seeing and the fuel crisis in Nigeria will abate, and we'll see more investors coming into the market. Thank you so much, Adore, for that insight. And Ini, that's what we have for the market. We're hoping today, bullish. I'm counting on it, and that's what I'm placing my fingers on, my bets on that.
Just cross them. Just cross them.
Keeping them crossed today.
Thank you so much, Will. Well, we'll take another break now. When we come back, we'll do an opening call to London. Do stay with us. It's Business Morning on Channels Television. We're off to London now. Scrapping restrictions seems to be the in thing at this time when the world is still dealing with COVID. The UK Prime Minister has given dates when some guidelines will be removed. Juliana has the details. Hello, Juliana. Good morning.
Good morning, Ini.
So are we back to the pre-COVID days?
Well, to answer that question with one answer, certainly not. If we think back to January 2020 to now February 2022, there have been over 160,000 deaths here in the UK, and COVID hasn't gone anywhere. So even though all restrictions will be lifted from Thursday. No, we're not back to COVID-19 days, but the laws have been ripped up by Boris Johnson. He announced yesterday a guideline for his living with COVID plan, which I think most people are pretty happy with. Nobody wants to live under restrictions that have blighted our lives, stopped our freedom of movement. But of course, there is certainly a sense of caution and apprehension. I don't think anybody, including myself, wants to be standing at a restaurant or on the tube next to somebody who's tested positive for COVID-19. But legally, you will no longer be required to self-isolate from Thursday, the 24th of February. The government said until the 1st of April they will be advising people to stay at home, though there will be no legal requirement. And from the 1st of April, you are entitled to do exactly how you wish. So, of course, this has been met with suspicion amongst the World Health Organization as well as other UN agencies, the Labour opposition party, and there are some concerns about the removal of lateral flow testing, free PCR testing in the community. There's been some shocking images, actually, of some individuals hoarding hundreds of tests and selling them online. Britain has become an outlier, and Boris Johnson knows that it is a serious gamble. Is it going to pay off? We'll just have to wait and see. But unfortunately, when you're dealing with people's lives, the consequences of the fallout could be very, very deadly.
Yeah, it could be very deadly. I guess the Prime Minister is just following his word, saying, I mean, we have to live with COVID, learn how to live with it. I guess this is just one of those action plans. But away from COVID, the GFG Alliance Metals Empire has started the process to reclaim a prized aluminium smelter in northern France from a U.S. private equity fund. What's this about?
Yes, I wish I could tell you in a couple of sentences, but it's very long, it's very complex, and as we know from GFG Alliance, run by Sanjeev Gupta, it's a very opaque firm under serious regulatory scrutiny across the world. I believe the Serious Fraud Office in the UK are investigating Sanjeev Gupta in GFG. There are also ongoing investigations in Germany, France, and in Romania. It all went bad for GFG, which is a steel magnate, when their biggest lender, Greensill Capital, collapsed last year. That was a big scandal because it involved former Conservative Prime Minister David Cameron. Ever since, they've been struggling to keep up with their payments. They actually tried to keep Liberty Steel, which is a huge firm here in the UK, going by receiving government funds. Kwasi Kwarteng, the business secretary, failed to help them out there. And because of their struggles, they struggled to pay back some loans owned by this American investment firm, American Industrial Partners, who quickly went into this aluminium site in the north of France. They took over that site in October. Now, one of the reasons why the GFG team have now put this allegation to the court to try and win back this site is because we know that aluminium and commodity costs have really shot up over the past few months. It is really their only profitable business yet, so they still want it back. But again, really difficult to try and ascertain what exactly is going on, because there are so many criminal investigations about this family in courts across the world. But they're trying this last-ditch effort to win back some funds before the inevitable collapse of the firm.
Yeah, very long story there, Juliana. But we'll certainly follow the story and see how it ends with all the criminal investigation and all of that. Thank you so much, Juliana. I'll talk to you later at 1:30.
Yeah, talk soon.
So let's take a peep into the crypto market now. Ladi, are we up? Are we down?
We're down. We're down, Ini. It's down, and it's extreme fear today at 20 points, all of 100, checking up the fear greed index. Just a couple of days ago, we're back at neutral, but it's way down to extreme fear. The market is really fearful now with Bitcoin, and see the market cap, they're pulling back about 7.18% this morning. $108.12 billion traded in the total crypto space, up 58%. Bitcoin dominance, 42.15. Price of Bitcoin at 8 a.m., 36,526, down about 5.73% this morning. Let's bring in Rume Ofi now to bring us up to. Hello, Rume.
Good morning, Ladi.
Good morning, Rume. Great to have you, Rume. What's happening in the market now? We're seeing Bitcoin having another major pullback. Over the weekend, it's down about 8%. Today, down about 5%. What's going on?
Investors are scared. You know, this is, people need to understand that this innovation actually by Satoshi Nakamoto that had this white paper launched in 2009 is just 13 years old. And people are still trying to get their understanding to see how they can use it as a safe haven, which is actually is, but they don't have the in-depth understanding of how it works. So this uncertainty of Russia and Ukraine actually one of the driving force in all of these things. But that is not enough for us to forget the fact that a lot of adoption is still going on in as much as this. But one thing I always advise investors to stay off is leverage trading. The idea is you can just buy low and leave it for a while. Even when it goes down in value, it can always go up. But when you leverage trade, it's not very nice. It can be very scary, and you lose all your money in the process. So a lot of these countries are coming in. Even Russia is coming in, even with the fact that they are up in the news, right? But they're coming in to say crypto will be allowed for people to transact with some of the instructions they've given here and there. Initially, it wasn't like that. It was like they are going to outright ban Bitcoin before now. But here we are. Market is going to bounce back. But like I said, this industry is not for everyone. It's for people with it's for people with strong mind and focused mind as well. Yeah.
All right, Rumi, I guess we're seeing markets rattled and the crypto market is not left out. Thank you so much, Rumi. Looking at the top odds by market cap now, see it's all red, double-digit losses with Solana there down 12%. XRP lost the 80 cents mark, down 13% this morning. So it's a bloodbath this morning.
Bloodbath, not a good one. Well, thank you so much, Laddie. But we would like to use this opportunity to tell our viewers that what we do here is to report the markets. We are not advertising, we're not recommending, and we do not have any platform where cryptocurrency is being sold or consultants. There's nothing. Channels Television does not have anything or anyone like that. All we do is to report the movements of the markets. That's what we do on this segment, the cryptocurrency segment on Business Morning. So please do not fall for any trap. It's not Channels TV talking to you. It's not Channel TV advertising to you. Now, that's it on the program. Thank you so much for being a part of it. Today, we'll do it again tomorrow, by God's grace. Don't forget to join us at 1:30. We'll have Business Incorporated updates from the world of business. I'm Ini John Mekwa.